Hey there, traders. Welcome back to your daily E-mini futures trading recap, where we identify levels of support and resistance in the SPY and use them throughout the open session to trade the E-mini futures. I'm Sam, and today is Friday, October 4, 2024. It's about 8:06 a.m. Eastern as I'm making this pre-market video. Check out the description below this video to learn more about the mission of this channel and the background on this trading strategy. Jumping right into the levels for today, notice that currently in the pre-market session, price has been pushed up a little. So far, they've almost reached 570 in the SPY. You can see what the current price is in the pre-market session by looking up here. They're at 569.35, currently at 8:07 a.m. I believe that 570.20 is an important area that the bulls would like to get above if they want to go higher. It should provide some resistance if price gets up there today. Above that level, and the bulls may try to run. If they pull back below the close of yesterday, which is around 567.80, the bears may have a better chance at pushing price down. At 8:30 a.m. Eastern, there are some job numbers being released. This news could set the tone of the market, at least prior to and around the open. We'll come back to this chart after the closing bell to talk about what happened and analyze any trades taken as a result of these levels. Catch you on the other side. Now that the market has closed, what can we say about the levels that we identified Friday morning? I'm making this post-market portion of the video Saturday morning, as you can see right here. It was a good day, a good morning, I should say, since all the official trades were done and profit was in the bag before 11 a.m. For me, I closed up shop shortly after 10 a.m. and just focused on other things for the day. We'll look at the recordings of the live trades that I took shortly. If you were trading these levels according to the rules, what would you have done? First, I'll add the 5-cent buffer to each level toward price. Also removed the other levels just to keep it simple. So this 5-cent buffer is a way to help grab trades at important levels when there is a chance of front runners trading before the level, which might get price to move prematurely. And since I consider most of my levels fairly important for the day, I usually factor the 5 cents in for most levels. It comes in handy sometimes when grabbing trades more precisely. So after giving the market about 15 minutes to settle in, so 9:45, they were under this level. The first trade of the day would have been a short trade right here at 572.09. This price was coming up into it, and that gave you 4 points or more. Very easy to pull as price fell down toward the next lower level. They got down to 570.20, which is 570.25 with the 5-cent buffer applied. That was another easy trade. This time on the long side, they bounced. I mentioned this morning before the market opened that I said that 570.20, that area, was an area that the bulls would like to stay above if they wanted to push price higher. And at the open, they gapped above this level quite a bit. And that doesn't diminish the importance of this level. The odds that a decent bull-bear battle will happen at levels like this is still pretty high. So the second base hit was in your pocket here when they battled this area. After getting a reaction there, they kept coming down. They got near the next level at 568.33. That's the operating level. And even with a 5-cent buffer applied, the trade would have been activated. They got to a low here of 568.35. So per the rules, that is a near miss. They came up within a couple pennies. And you'd want to reconsider taking the long trade if price were to come back down. Within a minute or so, they were back up pretty quickly, gave a base hit when they bounced off of 568.35. But here's the way I look at the whole setup. On other time frames and indicators that I use, it was clear that this whole area, remember there was a level down here, I just actually took it off. This whole area down here was supposed to provide pretty good support. Don't forget that the bulls are probably still looking at this 570.20 area, the 570.25, and want to get back above this area to stay bullish. At the time price was down here, there was really nothing bearish developing on the chart. Remember me saying on Friday morning that if the bears could get price below the close of the prior day, which is around 567.80 or so, then they might be able to push price lower. Well, they were getting down to that area. And the bulls know this, so they're going to defend it. The odds that you would get a more significant bounce here at 568.33 or in this area between these levels is still pretty good. So sure, taking this long trade at 568.33 was entirely a viable option. As you can see, that paid off. Now you have 3 base hits in your pocket. Then the bulls got price to climb back up into 570.25. That's their line in the sand. So don't think the bears aren't aware of that. So will there be another little battle here? You can almost bet on it. So trading on the short side for a recycle trade, there had been enough time that had passed when they got out of this level. They're coming back up into it from the other side. And if you took a short trade here, that's the fourth base hit of the day. And really, at this point, it would have been your last trade for the day. It doesn't matter if price got back up to this next level or down to here. They had already been traded. Those would be off the table for the rest of the day. They did come down first here, and we already had that long trade before, and I'm not taking another long trade again. It would have worked this time. They bounced again nice and cleanly here. But I've seen plenty of times where after hitting a level once, really good, the second or third time just doesn't hold up and they will bust through. Same thing back up here at the 570.20 area. Nothing they did here for the rest of the day, for the rest of the open session, would have been tradable in my book because this level had been already successfully traded on both sides. Then when they got back up to 572.09, there are two reasons that you would not have traded this again. One is what we just talked about. It had already been traded on the short side here. So do you want to take another short trade? And the other reason is, look at the time. It's right up against 3:30. And I just don't like entering trades within 30 minutes of the closing bell. It's usually too risky. Price doesn't always react at the levels that late in the day the way that I want them to. So no trade there. But 4 base hits is pretty good. Look at the trades that I took now. You can see the time this recording started. It was right after 9:45 a.m. I did not have an order in the system to trigger automatically when they got back up into this 572. It would have been 09 if you were strictly playing by the rules of the 5-cent buffer. I just was looking at this general vicinity. When I start playing this, though, you'll see me put a limit order on the chart over here in the E-minis to sell one ES contract in the vicinity of 572.14, or the equivalent in the E-minis. And by the way, the email that I sent out on Friday morning, I mentioned that it looked like there could be a short-term bullish move that could happen before a long-term bearish move. So kind of mixed signals. We'll look at some other charts later to show you what I mean. But this started to look like the initial bullish thing playing out when they gapped up. But I was willing to go short at this level because I trust them. And like I said earlier, it wouldn't have been too surprising for price to spend some time back down around 570.20 while the bulls and bears kind of fought that level. So let's start playing this. Anyway, I held out for 8 points on this first trade with just one contract. Got that pretty easily. Let you watch that, and then it came down pretty quickly into the next level, and it was an automatically triggered order down at 570.25. I think it did adjust that. Yep. So I got in with 3 contracts long, expecting to take 2 off at a base hit. I did. There's $500 with a pretty decent base hit, 5 points, and trailed the remaining 1 contract up for more points. I got 5 points on the first that you just saw, and got a decent amount of points on the second. It wasn't huge. And this was barely after 10 o'clock at this point. And I'd really only been paying attention to my screens for about 20 minutes or so. So knowing that I was going to head out about 12 noon and be busy for the rest of the day, I just put all this aside, decided to work on other things. I kept this recording going so I'd have proof that I didn't touch any other levels for the day. I was happy just to pocket the $1,000 in the morning and go on about my day. Right before 12 o'clock, I stopped recording and left the office. You'll notice everything has been made dotted, all the levels, just my indication that I'm not going to do anything. So I didn't do anything until, well, at all for the rest of the day, but I stopped this recording right before 12 or so and left the office. Since it was a Friday, we ended the week. Let's just take a look at the weekly chart first. They got above this trend line that we've been talking about a couple times, and what that looks like on the daily chart is this. So they definitely tried to get above it. They did. They closed this one day, closed the entire in the week, really. The weekly candle is above this trend line. So what does this mean? Well, let me show you what I was talking about earlier about the short-term bullish, long-term bearish. Maybe we can get into maybe a 60-minute chart, just an hourly chart. So this breakup candle here, back on October 1st, they've been coming down inside this candle. Can't get any closes below this. The low of this precisely here is 566.27. So no hourly closes below the low of this. So that usually means they're going to bounce off the bottom of this somewhere, and this will generally play out to the upside, which they did. They got way above it here, messed around, but they're hitting resistance here on this longer term. Well, it's still an hourly chart, but a big breakdown candle that they've been kind of, you can make the case, they've been building this chart pattern inside this breakdown candle. Now they're kind of back up to the top of this. Well, there's going to be resistance here. Obviously, they have to get above this area before they can break out into new all-time highs again. That's pretty obvious. So that's kind of like sort of, it wasn't too surprising they would bounce up first, but they've got to get above this. I mean, they could hit some major resistance and something could happen, Monday or Sunday night and fall down, or they could gap above and go even higher. So that's kind of the mixed signals I was talking about. I'm not sure if that helps, but They are above the trend line. That's kind of important. Really, there's nothing all that bearish currently where they're at, but anything can happen. They're kind of on the precipice. Over on the tracking logs, the first one is the playing by the rules log. You can read the notes, 4 base hits, just the recycle trade on level 6 here at 570.20. That was kind of the money spot for the day. So 16 points if you were just strictly playing by the rules and treating it like a process. So, but not a bad way to end the week. And over here on the Sam's Trades sheet, you can read the notes. I just took 2 of the levels, or took trades at 2 of the levels. Ignore this other one here, but it wasn't too bad. It was actually $1,050 before commissions on a combination of a 1 contract trade and then a 3 contract trade. And you can read the notes. So that's it for today. Thanks for tuning in to the recap. Hope you found it helpful. I hope you made some money today if you had the levels from the morning. Those of you on my list, I know I'm not getting a ton of views and subscribers and definitely no comments for some reason. But if you want to weigh in and let me know what your experience is, I would appreciate the feedback, because obviously they're working for me. I'm not hiding anything from you. I'm showing you everything that I do. So if you have the levels and you have a decent idea of what to do with the levels to trade the E-minis when price gets to them, then you should be making money. Anyway, feel free to leave a comment. So I will be back Monday morning with new levels, and we'll do this again. Thanks, and have a great rest of your day.